In market news now, Asian stocks nudged higher ahead of the influential U.S. inflation reports, while Japanese shares fell and the yen firmed on the rising expectation that the Bank of Japan may be ready to exit ultra-easy monetary policy as early as next week. Locally, in a voluntary trading statement, Old Mutual said exceptional growth in new business drove profit as much as 45% higher last year. The company excludes profit from its business in Zimbabwe because of hyperinflation in that country that triggers earnings volatility. The insurer will publish its results on March 27th. To give us perspective on the markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. Let's get a check-in on market sentiment right now and also some of the company news that may have caught your attention.
Market sentiment ahead of that most important inflation number, and it is important because this is the last one before the U.S. Central Bank makes their interest rate decision next week. Markets continue, the sentiment continues to be very positive, as much as we do expect that we might see a slight uptick compared to the January inflation, and this is happening a month after we've seen that inflation number in January. That was worse than expected and rattled markets, but I guess markets are content because they've just dialed back their expectation when interest rates will start going down in the U.S. And as we know that the U.S. happens to be the de facto rate setter and other guys tend to follow.
So let's talk about that CPI report and the different scenarios. What happens if the print comes out softer than expected? And also what happens if it shows that inflation is still sticky?
If it's still sticky, then it means that the fight is still very far from being on. Then the guys might necessarily not have to start maybe expecting the cuts to go to start in June, because it is now markets as factor that come June, then we should start seeing the first rate cut. And also the question will be by how much. So if it's sticky, then it means the guys still have to do more, meaning interest rates will still have to be higher for longer. But if we see a very serious improvement, then it will show us that at least the battle is almost on. And as we've seen, and we all know that everything they said will be data dependent, and the biggest culprit here continues to be inflation. So if they're managing to win that war, by all means, they don't have any reason not to start cutting interest rates. As well, they need to maintain their credibility.
We've had quite a lot of local companies release their results over the past couple of weeks. And granted, yes, they're all in different sectors. But what has been the overall theme for you, given the set of earnings you've seen?
I think it's a reflection of our GDP, as we've seen, that marginally there's just a little bit of improvement. And reason being, we know that guys had to cut costs, guys had to fight other things like port issues, logistics, as we know, because of rail, ports, stuff like that, load shedding. And as a result, the guys, as we've seen, that most consumers are under serious pressure. So the guys had to do whatever they need to do to protect their margins. The point we're making is that we've just seen a slight improvement, just like the way we've seen a slight improvement when it comes to our economy. So it's more of a mixed batch more than anything. But the good thing is that mixed to the positive more than to the negative. So they were not generally bad.
So let's talk about ABSA, because they released their earnings yesterday and the picture wasn't particularly pretty at all, given what we saw out of Nedbank and also what we're expecting to see from Standard Bank. What do you make of ABSA's performance, especially since that Barclays separation?
Those were very bad set of results. And we are saying bad in the sense that we're not just looking into profits, we are more worried about the credit impairments. This, I think, is one of the banks that had to increase credit impairments more than their peers. By whooping 13%. And as we have always said, that it's all well and good to benefit from high interest rates, but you'll get to a point where they start biting you. So as a result, their consumers, especially the retailers and small businesses, are struggling to make repayments. And so far, I think this is the best set of results that we have managed to get from our 5 big banks.
I want to go back to the data that we've gotten out of the US so far and a little bit of the data that we saw coming out of South Africa. If you put that all together, what's the main takeaway here?
That soft landing is still possible in the sense that we see data continue to be positive, and some of the data is not that great, but it's not negative in the sense that we have to continue to worry. Example being, we continue to see the PMI numbers continue to improve because most companies or countries are more of manufacturing more than anything, continues to be important, the manufacturing part of things. Inflation, we can see that as much as still at elevated levels, but it's not at a rate where we still have to be worried that it continues going up, as we'll see later as well with the US number getting to be released. And also when you look into the retail sales numbers for most countries, you can see that yes, the consumer continues to be resilient, and fortunately more than 60% of most of these developed economies continue to be driven by consumer demand.
As we wrap up, I'm going to ask you the same question I asked you a few weeks ago. What's important for you? Is it when the Fed cuts rates or why they're cutting?
When they cut rates, why they're cutting is because maybe they will know that they've managed to fight inflation. But the question is when. And also to add on that, the magnitude or the degree or the rapidness that the guys have to cut. The why part, I think we're all aware of why they should be cutting.
All right, Makwe, let's leave it there. Thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers. As I mentioned yesterday, apart from the US CPI data, it's the PPI and retail figures, as well as consumer sentiment numbers this week that we'll be paying attention to coming out of the US. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.